Good afternoon. Welcome to Options Center. It is Tuesday, the end of the month, pre-FOMC. We have FOMC tomorrow. So I was almost thinking that price action wasn't going to do anything today. It took a while for price to break down, but we got our move, and now we are somewhat neutralized in our positions. So although I have long-term swings out, I have shorter-term calls and even puts on the main indices going into FOMC. So sort of all over the place on that, but that's how I trade. So you need to have your trade strategy going into such a volatile day. But I'm going to show you today what I think the possible pathways are going into FOMC, which is going to be extremely volatile, and then where price action ends up, what it tells us, that's where, then we'll react off of that. So we're going to go through SPY on the multiple time frames, monthly all the way down to the 65. Monthly, I'm starting off here because this is the last trading day of the month, and so we can talk about that too. So if you're new here, go down to that bottom right corner, hit that Option Start logo, and subscribe. Thanks for joining us. Thanks for all the likes, all that good stuff. So let's jump into it. We have SPY on the monthly time frame, and we'll check out the VIX too. On the monthly time frame, although we have a wick, we still have a bearish engulfing candle at this time, depending on how we have at the close. So we're quite a bit under it, and by quite a bit I mean a few points, but it is a bearish engulfing so far. That is a bearish signal, but you need follow through after that. Not a whole lot more I want to share here, except for this is our target. On the monthly time frame, you have the 8 EMA, which should see some sort of reaction. That's at 483. That would be our very minimum. I could see a spike through it and get to these highs here. That would be our bare minimum for pullback if price wants to go higher and maybe touch this trend line here. I'm not sure that's the case, but we'll have to keep that in mind as price goes a little bit lower. Now, I think this is more of a valid spot. This is our breakout point, consolidation area. And so anywhere in here, including the top, could be, the next drop or so. That's on the monthly time frame. Once again, we have the 20 simple moving average at 8 EMA. So in the monthly time frame, technically we are in an uptrend. Going down to the weekly. And when you look at those monthly candles, you guys, those are long term. Those are months to years watching those candles go by. So, when I talk about those, just take each time frame in its perspective. Okay, so we still have this trend line up here. That's from 2000. That's from the 2000 top to the 2022 top. We didn't quite get there, and there's room to move up if price action wants to go there. That would be my alternate scenario. I think here's a better point of view. This is a consolidation area in the weekly time frame. Again, that's near where that 8 EMA is on the monthly time frame. So that coincides perfectly with these former highs that I think we could test here on the weekly. Now, with the Fed coming up and tech, we have Amazon tonight. We're starting to break back down underneath this 8 EMA in the weekly time frame. So that's looking pretty bearish. We still have a rising 20, so maybe we get caught up in there. Not quite sure. We need to get back above this 8 EMA in order to test higher ranges. And I'll show you on the lower time frames how I think price action may look going into and out of the FOMC minutes. But ultimately, I think we break down from the 20 simple moving average and go to test these areas down at 472. There's not much else in between it. Of course, there is on the daily time frame, but on the weekly, it's kind of a air pocket there. And the next consolidation zone would be here, coinciding with these former highs. So that's a, in my opinion, a minor breakout as opposed to this one. This was a great resistance / support zone, and I think we test that. And I know I didn't have this. I have this on other, maybe it's on the SPX or so, but there's also that former triangle that we talked about a couple years ago. It seems like a couple years, if it wasn't a year ago, that the SPY was triangulating into this. You see that dash line into that triangle, and that's where we actually paused there and held onto. So some people might consider this triangle as a breakout, and so that would coincide with this confluence here, this potential bottom of the channel. I know it's gonna rise as price action goes, but you have a confluence between these because we don't know if this channel is going to be good. There's only one touch there. I'm just kind of projecting if price action gets down there. You have the 50 simple moving average on the weekly time frame, but really ultimately the horizontal lines are the best thing to pay attention to, and this is the consolidation area here. So you have 472, 553. This entire zone, I believe we're going to have a temporary bottom and where we get our bounce. Moving on to the daily. Now the daily time frame, if you're new here, we'll just go through the kind of the pathway that we're looking at. We'll first do the trend is our friend, our traditional analysis. That's a consolidation area we constantly talk about. And so you can see where I put the green zone. We did the same thing way back here, and that was our volume node. I do think price makes it down here. If the indicators start getting extremely oversold and bullish divergences and things like that well before this area, then we have to kind of reevaluate. But as a projection, as of this point, I could see at minimum an ABC or 1, 2, 3, 4, 5 into this zone. There's a few things lower, and clearly there's a few things higher, but I think this is a zone where we get a 200-day moving average. Seems to be the spot to check back to. Back here, and you see it spikes through, so we could easily get to that 462. But there's that 472 we keep talking about. By the time we get down there, the 472, the 200-day moving average is going to be in that area, if not just a little bit above. Okay, so looking a little bit closer, we have the breakdown. We are rejecting off of, didn't quite make it to the 50-day moving average, rejecting off the 20-day and underneath this 8 EMA. In my opinion, the only thing, there is some support coming in here. We have some support that we're closing up on gaps, and this, again, is a support area around the 502, 503 zone, but this is a zone because we're right back. We talked about this a couple of videos ago. This was a good resistance here, but this is a zone because we made this support at 504. We're just underneath it. We could regain that. So all in this zone, we're looking again for a little bit of support. Now, I don't know if this is finished. We have our evening star reversal and we continue lower. But my best guess, we only made it to the 50% retracement. I do think we have some unfinished business, and price, especially with FOMC, may want to get us to the 513. That would be my sell point. and or close a gap at 518. Don't know if that's possible, but we would start being much more aggressive to the downside at this 513. Okay, now I'm going to show the pathway, then we'll go to the 65. Check out VIX, and then we'll end this video. So this is our expanding ending diagonal. It's what we've been talking about over and over again. We have this expansion into each wave. This is a blow off top, and this is a major top here. So we have an ABC into 1, ABC into 2, and then so on, 3, 4, 5 to complete. And now we're looking at a first initial move down, a retracement, and that 513 area would be this support over here. There's not much that says anything on here other than spiking through the 50 just to test it, to maybe get to that 513. But if we do get a little bit higher, that's our former resistance right here is the 127.2 on the higher time frame, the 516. Okay, so we're at the very, very bottom of our sell zone. And just typically, that would be very bearish if we continue to the downside. I'm not saying it's not possible, but I'm just thinking that that's not really the case. So I kind of have projected here a little bit higher and a continuation to the downside. Now we can talk about that. I didn't make it this weekend, but soon I'll be talking about where the long run we're looking at these targets. Now, the alternate scenario would be that this is an ending diagonal. Forgive me with all the time frames here. And it's good actually that I came to this because yesterday it was the 29th. We talked about a time and price relationship being on the 29th. We got that. We also have the 50, and we also have an extension here where we're reversing off of. So there's a lot of, there's a good story here about, reversing and this being it. But on the lower time frame, I'm kind of skeptical about that. But we have our long-term swings out there. We just want to protect those. Okay. So with that said, we had the time price. I do think we go lower. If this were the scenario, we're looking at this entire move being this one being a three-wave move into 1. This into 2, we finish off 3, and we're looking to finish 4. Could 4 be complete here at the 28.6 retracement or 23.6 retracement? Sure. Yeah, absolutely. If we hold above this, then yeah, absolutely. It's not typical. Typical for a wave 4 would it be minimum this 382 about the 480 zone. Remember we talked about that being our minimum area on that higher time frame. So that's all I want to show you. And then after this wave 4, if this were an ending diagonal, it is not unusual to cross over wave 1. So that's why I have it so deep over here. We were playing Boeing today. We got a good, nice play off of that. That was in the Discord if you're interested. The options guys, I put that trade alert out there. So if we get a pullback for wave 4 that crosses over 1, that's a nice deep pullback right into this 50-60% retracement, and we'll see what kind of time relationship we have as price gets to that zone. All right, moving on to the 65, and then we'll head to the VIX in this video. All right, going into FOMC. This is what we're looking at. Possible bear flag. I still think this flag is intact, but we haven't quite tested the bottom there. So this is a possibility going into the tomorrow with Amazon being in earnings. We could gap down to this point. If we hold the bottom of this flag, we'll look at kind of adding onto our long positions into a higher price level. Now this again would be our this is a downtrend line no matter how you look at it. We have 3 points on there, so it's very valid. And then you can consider this a flag. We only have one touch on the bottom there. This could be complete. We could continue to the downside. Again, that's a possibility. We are hedged in the near term, just in case we gap down. We get underneath this flag, and we really have to start considering more downside. But if we hold this, we have 2 points here. And if we make a third point somewhere around this 503, 502, a little bit lower, that would be a good spot to actually go long, believe it or not, with your stop right underneath. Okay, so why do we say that? Well, first of all, if you're very conservative, you can wait to cross above this downtrend line. That would be a breakout, and then you notice we have the options expected move up here at the 515 that coincided with the 127 that we showed on the higher time frame, and that's also the gap area. The gap goes all the way up here to 518. All that could come into play and still be in this flag. All right. So the argument, if that were the case, if we did not continue to go down, if we held, this will also be an argument for the bulls, because you would have a 1, 2, 3, 4, 5 potentially wave move. They all overlap, but you can make the argument for it. Okay. Yeah, it's a good thing we have these near-term puts. Look at that. Just driving right to the downside. So we'll probably add on some near-term calls to kind of neutralize those puts. They're pretty big positions. So I want to neutralize those if and when we get right down to this area. So we're at support. We're starting to break that support, and we're getting to this 502 area. Let me show you what's important about that. And then I'll get this out to you so you can make some changes if you want to do so. So we stopped at that 382. We're right talking about the 502.42. Here it is, 50% retracement. That's really what we were looking for. This is a very good spot. It coincides with the bottom. We have some confluence there, the bottom of the flag, and a 50% retracement of this entire move. That would be an A. I have that mark here. You also see this cluster of from yesterday that gave us a high. It coincides with the daily time frame. I'm looking at this vertical line. Those are time relationships. I'm going to take all those off after today, now that I showed you. And then we're looking for a B wave. And I think that might be the 50%. And then a C, which potentially could be this 100 extension if we make it up to this about here, which is a 50% retracement. That's our extension, just where A equals C. Doesn't have to happen. We can still complete this right here at the 62%, which is also the 513 zone, also the 200 moving average. So that's not going to be an easy spot to get above, but we get a spot above this. We get above and hold above. The next level we're going to is at 518. All right. I'm going to stop it here. We have the VIX. Not stop it here. I have to go to the VIX. We got just a couple seconds left here. We have the VIX. All right, sorry about that. I had to pause the video because we were getting down to my target, so I had to extend that. Now we're starting to try to break out. I have to be more specific. So we're going to pause right on this. That's just how the market works, you guys. We're going to pause right on this downtrend line. Okay, so easily this could go down to here, that next target, into tomorrow. Okay, we have our A, B, 1, 2, 3, 4, and 5. That's what I think is going to happen. I think we reject off here, but if we gap above this and go, you better believe that the SPY has done its job, and this will be the high, right? That this will be a good high for us, okay? All right, I'm going to get this video out. Thanks for joining us here at Options Center. Have a wonderful day. We'll talk to you tomorrow.